And the way they hedge that out today, well, as you know, right, is through all these overlay strategies and option strategies that actually cost them a lot of money, right? That can leave, that really up the expense of managing these treasuries. So I do think that that's going to be a big next step. And then I think beyond it raises even a bigger question, right? Which is, if I'm tokenizing an exposure and that exposure is sitting in a token, why does it have to be an equity, right? I do think we're going to see a complete rethink of the capital raising ecosystem coming from these big institutional players. And let me make it super simple, right? On Amazon, right? Why do I have to bundle my Amazon retail services and my Amazon web services and my Amazon logistical services into one stock price?
That's
Right?
right.
Why not have three tokens that give exposures to different parts of Amazon's business? And that immediately gives me, as the management team at Amazon, more insight into how the market is looking at how I'm managing my businesses as well. So I think that this idea that we need an equity to have exposure to a company is going to really come under challenge in the next few years, because there's more efficient ways for me to be raising capital for parts of the company that make more logical sense for each other. And I think that we're going to see the issuance of new types of corporate exposure tokens pretty soon. Like, I think that once people get comfortable with this idea that a token can hold any type of exposure, the need to issue an equity and be a public company and be subject to the exposure and all of the scrutiny that public companies get, we might see a real shift in thinking around how do big corporations raise money in the future.